Hi, it's Richard Geller. You're probably aware that Congress is just on the cusp of passing some new legislation, part of the stimulus package, which is going to affect loan mods. In the past, loan mods have been voluntary. The lenders each have their own way of doing loan mods, and they can do them or they cannot do them. Their standards vary between different lenders. Things change every day, even with the same lender. There aren't any set of uniform guidelines. Now, there's a couple of exceptions to this. One of the exceptions is the FDIC has sort of put into place their own loan mod program when they take over failing institutions. They have been taking over just small ones, but last year they took over IndyMac Bank, and they started a new loan mod process with IndyMac Bank customers. And I think that this is going to be a model, and the Hope for Homeowners program is going to be a model. And I think that we're facing a major change in loan mods and the way loan mods are going to be handled, which might affect you. So this will apply whether you're somebody who's in the business of doing loan mods for profit, whether you're thinking about getting in that business, or if you're a homeowner looking for loan mods for your own place. First of all, the one thing that there isn't going to change is going to be the fact that loan mods are going to be for people who have investment properties. They're not going to be part of the loan mod program, because all of the laws and the statutes and all the new things that they're talking about all applies to owner-occupied houses, not investment houses. So if you're looking to mod a loan on investment property, the old rules are going to apply. That is, no rules. Lenders will do whatever they want or don't want to do. So that's not going to be affected by this new legislation. What is going to be affected is the loan mods for owner-occupied single-family dwellings or condos. And I think what it's going to look like is this. I think we have a good clue. First of all, this is going to be a huge bailout for the lenders. What they're going to be able to do, and this is just pending, okay? This is Richard's theories here and reading between the lines. But so this isn't cast in stone. I just want you to know that. But what I think is going to happen is they're going to buy out billions and billions and billions of dollars of bad loans from the lenders, because this is all about bailing out the lenders. It doesn't have to do with bailing out you and me. They're going to bail out the lenders. They're going to buy these bad loans. And in return, the lenders are going to have to do loan mods according to certain standard specifications. So they're going to have to agree to do a loan mod. And in fact, they'll be able to do loan mods even if you're not in default, I think. But it'll be like, well, we'll lower your interest rate. If your income is such and such, we'll make it so that your loan is no more than 31% of your income. So that's basically the guideline. It's going to be at 31% of the income. Your loan will be adjusted in payments for that. And if the payments don't work out, they'll even lengthen the time that your loan is in place. So let's say you have 28 years remaining on your loan, they'll make it 35 years. Principal reductions are not going to be mandated, I don't think. However, I think in the near future, there are going to be principal reductions. I think there'll be principal reductions in two places. Number one, in bankruptcy court. The Chapter 13, I think they're going to be allowing those judges to lower people's principal. I think they will. This is theory on my part, but I think they will. Number two, I think they're going to have principal reductions as part of a loan mod package in the future. I think what it's going to be is, if you lower your principal, the lender's going to get money from the federal government, so they're going to be made whole. They're not going to have these losses. And in return, the federal government is going to share any price appreciation of your house with you. So if you sell your house, you're going to owe the federal government part of the profits. That's the Hope for Homeowner program right now, and that's one reason it hasn't been particularly successful. I think that they're going to take the Hope for Homeowner program and what the FDIC has been doing with IndyMac Bank. I think they're going to be putting these things together. So, and let me just sum it up for you. Right now, it's only, none of this has changed yet. We're just talking theory. It looks like it will. I believe it will. We're just talking about what affects single-family, owner-occupied houses and condos, things like that. We're talking about that they probably will have some kind of a standard where your payment will be lowered to 31% of your income, and it'll be done by either lowering the interest rate or lengthening the lifetime of your loan, the time you have to pay back your loan. The federal government will guarantee something to the institution so that they're cool with it. And if principal reductions are on the table, then there'll be a requirement that you participate in any profits that you make by forking over some of it to the federal government. I think that's what we're going to see. So do I think the loan mod business is dead? Is there no more opportunity in loan mods? No, I think there's huge opportunities in loan mods. There's just a whole morass of paperwork. Think about this. Think about the taxes that people have to prepare. Some people prepare their own taxes, but a lot of people, most people, go to somebody else to prepare their taxes. This is a very complex thing. It's much more complicated than preparing taxes for the average person because there's all these different steps involved. It's not just filing a single form. And so I think there's going to be a tremendous opportunity for people in the loan mod business. And if you're not in the loan mod business already, I think you should think about being in the loan mod business. When you do loan mods, you're going to be able to participate in our teleconferences, and you're going to be up-to-the-minute information you're going to have on what's going on and what's changing and all the things I've talked about. You're going to get advance notice, and you'll be able to know how to deal with it. You'll know how to do your marketing. We have a seminar coming up on Tuesday. In fact, for advanced people who are already in the loan mod business or in the real estate business that you can participate in if you get Loan Mod Magic right now. And we have another one coming up for anyone else interested in loan mods, only subscribers, only people that have my course. We'll go to that one. And you're going to be part of this whole thing where if you have a question, you have a problem, you go online, private online place, you ask your question, you get answers, and you see what other people's answers are in a private environment. So that's all part of my, my program. I hope this has been helpful. And I hope that you do get your loan mod granted. I hope that you get help with it. And I hope if you're somebody in the business that you'll get into loan mods and help out some of the millions of homeowners that need your help. Talk to you soon. Thank you.